Hey guys, Brian Horton with BK Forks Academy, and we're going to be talking about double tops and double bottoms. So double tops and double bottoms are supply and demand support and resistance trading. So some people call it reversal trading. So they're looking for a setup and where to enter where price is going to reverse and where you're going to put in your entry. Very, very easy strategy. This is the way that I trade. This is how I became profitable as a swing trader. And so we're going to talk a little bit about that. Now, as bankers and institutions and hedge funds move this market, they're specifically looking at the price on the right side. That's important to them. They're not necessarily looking at tops and bottoms as we do, but we're looking at these candles and it tells us which price is important to these bankers and institutions. And the reason why double tops and double bottoms are important is because buying pressure for double tops begins to decease or stop, and selling pressure starts to pick up. Now, that's important to bankers and hedge funds because that's how they make their money as well. So let's go ahead and dive right into it and let's rack up these pips. So we're on the daily for the Euro AUD or the Euro Aussie, and we see these peaks here, right? So I'm on the replay mode. We're going to go ahead and hit play and just kind of see how it plays out. So you can see how I actually trade these double tops. So we're currently looking for double tops, right? So we see this trade, we see it's going down here and it's starting, it looks like it's starting to create some lower lows here. Price begins to move back up, come back down, right? And as price begins to move back up, it begins to retest this area right here, okay? So the reason why I'm looking for this area is because I noticed that these candles here shows that buying pressure has slowed down significantly. We see a strong sell candle repeated after a strong buy candle. So this tells me that the bankers, the hedge funds, and the institutions are looking at this and saying, hey, this is a strong price to try to bring more buyers into the market. So we're going to sell it really strong. It comes down, and let's see how many pips this is. Very significant level here. So price comes down here and it looks like it's about 560 pips or so. So this is my first indicator. I'm on the daily first, right? And so I see price shoot down and it takes a couple weeks to go down, but it's about 560 pips. So that leaves this gap right here before it retests again right here. So for over 560 pips, that tells me that when price begins to retest this area, there's a reason that price may reverse, forming this double top. So we see this top here, and then we see this top right here. So my eye is right here. I would set an alert for a possible sell limit. And as I see price hit here, I see this wick and then a strong red candle. That is my indicator that I will go ahead and get into the trade. Okay. So my personal trading strategy, right? I see this high here or this peak here. And then it goes down into a deep dive, 560 pips. And because that is a significant amount of pips, that tells me that when price comes back here, it has a stronger chance of reversing here. So let's go ahead and hit the play button. And then it starts to shoot down, right? Now, where am I going to set my take profit? That is completely up to you, your risk management plan and your trading plan. But this is how I set my take profit. I combine it with confluence. So first I want to see what trend am I in? I want to see the overall trend. Am I in an uptrend or a downtrend? So what I go ahead and do is look left. I can even scrunch up my screen a bit. I will look left and it looks like I am in an uptrend. Okay, so I'm going to get my trend line here. And instead of grabbing it from here this way, I'm going to actually do this. I'm going to grab my trend line and begin it from about right here. And the reason why is because I noticed that price was going up originally around this area, and then it shot down and it created a new lower low. So it broke this higher low. So that is no longer a trend, and it started its next trend here. So that's where I'm drawing my trend line. So remember, this trend line is a form of support and resistance as well. So support and resistance from the top and bottom, and then your trend line is going to be your support and resistance from the side. So we're trapping price. All right. So we have our double tops, And then I would personally exit here once it hits my trend line because this is my support zone. All right. And then I'm going to look to see if price is going to repeat the pattern, bounce back up here for a possible sell. But remember, if my trend line is considered my support and I pull this all the way here, eventually it will become my resistance and bounce back here. Right? The further my trend line go. So it depends. So I'm looking at this chart on the daily and even a weekly basis to see what's happening, if it will break my trend line, right? And if it does break my trend line, I'm looking for price to come here, and now it's become my resistance. And then I'm looking for a double bottom. Okay. So that's how we're identifying these double tops and these double bottoms. We want to see this gap here. This gap is significant because this is 560 pips that it went to the downside before it rose back up. So now that it hits this area again, my radar is on saying that this is a possible resistance zone where price has respected. The banker said that this is a great place to sell. And I went ahead and sold. Okay. Another way is to even look left for clues. And as we look left for clues, I can draw my resistance line here. And this was also a significant place. Here's my gap right here. So not only is this a double top, this is even a triple top here. So this is respected by those who are moving the market, the hedge funds and the bankers. We're in this just for a ride, and we're looking at these candles to tell us where to get in. When bankers and hedge funds are looking at the price here on the right to say when it's a good time to buy or sell. So I would use my trend line as confluence because I want to know, when can I get out? I'm using my trend line. Now, can it break through? Absolutely. But my trend line is there for a reason. And that's my support line vertically, right? And then I even have a support line horizontally. Okay. So I can have a support line going this way. I can even bring it further down here if I want. But because I'm in an uptrend, I'm not going to take that risk. I have a 1 to 2% risk reward ratio when I trade. Yours may look a little different. Okay. So that's how I go ahead and take my take profit. And that's how I indicate when I'm going to enter. I need to see this right here, this red candle shooting down. I need to also see this wick here showing resistance, this red candle confirming my resistance, and then I can go ahead and enter for that down, right? And some of you are looking at this and saying, well, that's just a few candles here, but I'm on the daily. So if I were to enter even at the bottom of this red candle to the trend line, that's almost 200 pips in about 3.5 days. If I were to enter from within my red zone to that trend line, that's 200, almost 300 pips. Okay, so this is going to be my resistance zone here. So whenever price hits this area in the future, I'm going to set an alert to reevaluate my chart and to find out what I'm going to do, if I'm going to buy or sell. I have my trend line here just for that support, so I can also go ahead and see what's going to happen. And if I want for more confluence, I can even throw in a Bollinger Band or even an RSI to tell me what I already know. So for example, let me go ahead and hit my RSI indicator. And we can see as soon as price hit my zone, the RSI was at 70, which is also my resistance area. So I have my zone here, this long red rectangle as my resistance area. I have my trend line as my resistance or as my support area, right? And then I even have my RSI as my resistance area. So when my RSI hits close to 70, that tells me that it is overbought and that price should be heading down. And if I want to make it even better, I can go ahead and draw a channel, okay, to support my trend line support zone. So now this is my resistance zone vertically. So it's bouncing off of my top of my channel. It's also bouncing off the top of my horizontal resistance. And then it's even hitting my 70 RSI, which is telling me that price is overbought and price has to come down. So as you can see, I've used a few different things in my trading bag, okay? And that's how you trade. You don't want to just trade off of indicators alone. You don't want to just trade off of price action alone, but you want to use different things as confluence. So I used one resistance line here, which I looked in the past and it respected it here, respected it here, and respected it here. And then I drew my trend line and my channel in which it respected the top of my trend line. Okay. And then my RSI, which also supports an overbought pair. And price has to come down. This happens about 90% of the times when I trade. So you want to use a few different things for confluence. And then let's go ahead and look at a double bottom. Same thing, but in reverse. But let's check that out. Okay, so now I'm on a daily GBP and ZD. I'm going to go ahead and hit play right here. And then we see price hitting this low here. We see a strong wick rejection, which always shows that price will reverse. Price goes up. And then it looks like price goes ahead and retests this area eventually right here, right? And so I'm going to go ahead and draw this line here. We see this nice gap. So then I'm going to go ahead and use my measuring tool from here to this high. That's about 450 pips before it retests this area again. So that shows me that this price is significant to the bankers and institutions, right? And then we see price go ahead and start to move to the upside within that area. If I go ahead and let's go ahead and put in my RSI. Okay. As I come here, so as we look down here, price goes all the way down to the bottom to my 30, which is showing that price is oversold. Price begins to go up. Okay. And in this case, we're at the bottom of a downtrend. Okay. So we haven't started making higher highs and higher lows yet for an uptrend. So we're all the way at the bottom, right? And if you want, you can position trade or even swing trade this for a possible buy for weeks and even months to come if you're at the bottom of a trend, which is awesome. So we use our trend line, even though we don't have a trend here, but we used our bottoms here, 1 and 2. And then we even used our RSI for confluence. It was at our 30 level, right? And we can go ahead and enter. We see our white candles beginning to form. And you can even start to enter on this third white candle showing a push to the upside, a strong push, right? So we're at the bottom of a trend in this situation here, which is awesome. And guys, so that's pretty much it. This is a simple strategy that you can use on any time frame, but I suggest that you use the higher time frame to show your framework, to show what trend you're in. So that's going to conclude it. Go ahead and like and subscribe if you haven't already. If this helps you out a lot, leave a comment so we know what you look forward to in the future and if this helped you or not and how we can help you. Go ahead and join our Telegram for free content in our academy if you struggle and need your handheld at bkforexacademy.com. We'll see you in the next video, guys. Have a good one.